In this episode, we speak with Jamie Hale, CEO and co-founder of Ladder, an insurtech company focused on making life insurance faster and easier to purchase online. Ladder offers a digital application experience built around speed and simplicity, with real-time underwriting that can result in on-the-spot coverage and a process designed to be completed from home. Hale co-founded Ladder in 2015 after a career spanning investing and financial services, including roles as a founding partner at Aldenwood Capital and as a partner at Oak Hill Investment Management. Earlier, he worked on new product development at NextCard. I am your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the executive chairman of Market Insight Media and the managing partner of Growth Cap. He is the host of Great Entrepreneurs, a podcast for driven entrepreneurs and business owners. Our podcast covers all topics related to the entrepreneurial journey, from ideation to execution to optimization and to reaping the rewards of a well-run business. In the minutes ahead, we'll share with you unique insights and tactics from some of today's most accomplished and inspiring entrepreneurs.
Jamie, thanks so much for taking the time. Great to be with you.
Great to be with you, RJ. Thanks for having me on.
So we share something in common in that we both spent some time at Lazard. I noticed that.
No way.
Yeah, I was there mid-career.
Okay. So I started out, man, right at the bottom.
Yeah.
They'll train you up pretty fast.
Well, it's a testament then to your financial acumen that you started your career there as an analyst, and then you helped establish the San Francisco office.
Yeah.
And coincidentally, I'd met someone on a flight who also had helped set up that office. She said she managed it. I don't recall her name.
Well, it could have been a couple of different people, but yeah, the senior partner was Bill Loomis, who helped open up the partner, and Richard Emerson came out as well. So there was a lot of really great DNA in that San Francisco office, and it was exciting to be out on the West Coast from Lazard. So what group were you in?
I was in a group called Alternative Capital Finance.
Okay.
It might be in a different form now.
Yeah,
At
sure.
the time, we did kind of special situations catering to the private market. But it's interesting that your career went from more finance to investing, and then you decide to found a company. Did you foresee eventually heading in that direction?
I didn't. That's not how I started. So yeah, I mean, went to Lazard right out of undergrad. I loved finance and enjoyed finance. Had a great career at Lazard, went back to Harvard Business School, and then really began to get a little of the entrepreneurial bug then. It was the first wave of the internet. I came out and worked for one of the early fintechs called NextCard. We were doing online credit, where we'd underwrite people in real time, issue credit cards in real time. So there's some similarities to what we're doing now at Ladder in that we make instant decisions for people for life insurance.
Mm-hmm.
So really enjoyed that period, but decided, you know what, finance is more for me. So went back and worked in both venture and private equity and private capital for a long time, had a long career. And, was really thinking about what's next. Made partner and, things are great. But I founded really Ladder out of a little bit of a passion in that I'm sure like you, RJ, like a lot of my friends would come to me kind of list for like personal finance advice. Like, hey, how should I set stuff up? What should I do? And it was amazing for a lot of them. They didn't have life insurance in place, which is a real, especially as your family's starting out, a real foundation that you put on yourself financially. And it's not very expensive. So the reason I was passionate about it is my dad died when I was 11. And we had life insurance that did exactly what it was supposed to do. Me and my mom in our home around our friends during a really, really hard time. So we were supported by our community. It helped get me to Bowdoin and really fund my education and really launched me to this really fun and exciting career starting at Lazard. So it played a hugely redeeming role in my life. And I talked to my friends, I'm like, why haven't you gotten this place? What's going on? And inevitably, it came down to, I have to go seek someone out. I got to go find someone. Once I find that someone, I then have to sit through kind of a timeshare sales pitch where they're trying to sell me a ton of different products that probably aren't right for me, especially when they're just starting out. Because for most of my friends, term was the right type of insurance for them. It gives you a lot of face coverage for very low premium and protects your family or loved ones if something happens. So I was actually going through this process with one of my co-founders, Jeff, And he's like, geez, Jamie, like, it's got to be easier. Like, why isn't this easier? So then I spent probably a good 9 months actually using a lot of my friendships in finance to talk to the investing side of the insurance house and say, hey, can you introduce me to the production side and help me understand why hasn't someone done this? And there's 1,000 little small kind of channel conflict type of reasons, but the reasons mainly were like everyone has a go-to-market motion and no one was really looking at investing in innovation. So that's where kind of Ladder came from.
It's not very frequent that I encounter a company founder that had already an established career in private equity that then goes to do something like this. Was there kind of a pull in both directions, meaning like the inertia to stay doing what you were doing, you were making good money, you had a lot of industry clout, you had built up to that point, and then you're going to start from scratch, but yet you really kind of wanted to do that. You felt like the urge.
Yeah, it is rare. And I mean, the firm I was at was great, making a ton of money, had a really good culture, very intellectual culture. We were invested. I had started a couple of businesses inside that group that were doing very well, very high growth, very profitable. I'd been sticking up the highest profits per partner for a couple of years. So like it was wonderful. My dad, coming back to my dad being the big role in my life, actually started out his career on Wall Street too, but on the lawyer side, started out at White and Case and decided to start with two friends, his own law firm in Boston. And it was really successful. He died way too early, but he always instilled a little bit of the entrepreneurial bug. Like, I'm building this firm. And there was an excitement about that when we were young. So I always had a little bit of that itch. And what's nice about private equity is you can kind of do well. So a lot of times people do startups early because it's risky.
Mm-hmm.
And, as a young person starting out, you have a lot of downside. What's nice is I was kind of on the other side of that career, kind of on that bell curve where it wasn't that risky for my family.
Mm-hmm.
And then, as you can tell, I'm super energized about it.
Yeah. And so given that you had some experience building companies, I guess, within the investment firm, was it fairly clear how you would proceed step by step in building Ladder?
Yes and no. What's nice about private equity and everything else, you'd have relatively small teams. Even at Lazard, we had very small teams. And you would kind of function as cells, but rarely would you have a team larger than 6 or 8. When you're building a company opposed to a strategy, you really have to build a lot more people systems. Culture matters a lot more. There's a lot more different roles. So it was a challenge, but one that I found exciting. And, we're still, as all companies are, we're still work in progress. I made some mistakes too. I had to learn a lot on that side of the equation.
Yeah, it seems like if you grow up and at least this was my experience too, is like you're used to having folks in investment banking who I described it this way the other day. It was folks that could be a Swiss Army knife. Like you could hire one person, one analyst that can do everything, but that's a very small percentage of the population.
It's a small percentage of the population. It's interesting in startups. It's important early, but becomes actually a detriment later, right? So I call them utility infielders. You need some good utility infielders. And especially as individual orgs begin to grow, you need people who can be both players and coaches, right? They need to be able to hire some people below them, coach, be flexible. The walls between like what happens in this group versus that group is all very fuzzy. And what's great is, both in banking and investing, you tend to get these very high energy young people who are mentally flexible, willing to kind of do anything and play any role. That's really good early on. The challenge is if you stay with that too long, you're not developing that kind of deep domain expertise. And there's too much kind of, is it my lane or your lane? And that's why you look at any professional sports team that really is playing at a high level, each role knows what they need to do, and they have specific actions they need to do. But they're not doing everything all at once. It's not like as much soccer as it is really like, think of American football, right? Where the linemen have a very specific role they need to play. And if they don't play successfully, the play is not going to work or they're going to get scored on. But if they do their job and then the coach is making sure everyone's doing their job, it allows you to scale much more efficiently. But there's phases and growing pains. I'd still tell my friends who are starting early stage, you got to find those first 2 or 3 people that are really your utility players.
Well, you've scaled rapidly. And I think I read you scaled up to about 30 billion, I think in several years. I mean, that's an astounding number I mean, obviously your assessment was correct, right? It's too hard to get life insurance, or many people don't even have it. Who are you competing with today? Is it the same kind of old way of doing it where you have to find someone who will sell it to you?
Well, the traditional incumbents are very good at what they do. They're very big marketing budgets. Of course, they're competition. They tend not to be really our core customers.
Right.
What Ladder value prop really is we give you an instant decision, all digital, up to $3 million. Most people are done in less than 10 minutes, right?
Mm-hmm.
And it's a very high NPS experience, 84. But what's unique about us is we take life insurance out to where people are.
Mm-hmm.
And we do it digitally. So we want to embed life insurance when you're thinking about mortgages or financial planning or small business lending or saving for your kids' college. All these life events drive the need for life insurance and the awareness of it. And then opposing to have a consumer having to go search for it. I got to find a guy. I have to go meet with them, or I can actually find it right where I am, right with my trusted relationships, and I can issue and bind right away.
Mm-hmm.
And be done. And, we can also, through our APIs, those partners that we have, they can show you, hey, your policy's in force. Here's your next premium payment. And given we're digital, you can adjust your policy over time, which is really powerful. No one else provides that flexibility. And when we built it from the ground up, we're like, why not? Like your needs change over time. You have a second kid, or the kid's through college and you paid off college. Like you need less. So being able to dial it in and dial it out throughout your life is pretty important.
How do most customers find Ladder? Is it just primarily through partner channels?
Primarily through partner channels. We're also very active in direct advertising. You can imagine all of our digital ads. In that space, our big competitor is Ethos, that just went public.
Mm-hmm.
So, Ethos is much more focused just on the ad side of the equation. And, that's an important part for us. But the majority of our growth is through our partner channels because it's just so relevant. It's where people are thinking about their finances and managing their financial lives. And the fact that we can be embedded in those other partners' site and for those partners, drive real meaningful revenue. But most importantly, for those customers, it's in the context that really makes sense to them, right? They're in someplace applying for a mortgage or looking at how the 529 performance is doing. And do we have enough saved for the kids' college? And oh gosh, if I were to pass away too early, could my spouse really bear that burden? Like all those questions come up there. So I bring life insurance out into that context. It's really relevant. And you got to do it on mobile too. I mean, I don't know about you, but like a lot of my life is here, including managing my finances and everything else. So we're very unique in that we're by far the first mobile first life company out there. And, well over 60% of our applications are mobile driven.
And I imagine from your business's perspective, can be fairly lucrative. I mean, you're helping to place these policies. You get maybe a percentage, but maybe not as high as I don't know, or maybe it is as high as the individual who's selling it. You're doing a ton of volume.
Yes, we're doing a ton of volume. Our unit economics are very strong, which is good. One of the things I was talking about when we founded the company, early stage, and I still talk about it, the business of insurance is fundamentally good. I mean, it's a strong financial performing vertical, but it also does really provide a social good. You're taking a really low probability chance that has a really big, I'm going to talk, you're a finance guy too. I'll use more my math stuff. It's a low probability chance with a big negative payoff for your family. By pooling those risks together, which is what a life insurance pool does when you're buying a policy or getting in a pool with all these other people, it spreads the risk. So that risk can then get priced way cheaper. So we're doing a great job at getting more good, young, healthy people into that pool. And that keeps the price low for everyone while making sure, something unlucky happens, their family's taken care of. And we love it that we have well over 100,000 families we're taking care of every day.
But to clarify, you don't hold that risk.
No.
Right.
Yeah. So we're an MGA. So we're a managing general agency. So we do all the distribution. We do underwriting as a service. We do the administration. So all this stuff can be purely digital. I mean, the challenge is, imagine someone with a legacy policy admin system running on an AS400 mainframe, right? Trying to work with a modern fintech or neobank and trying to get that API exposed so you can see payments and policy. And it just doesn't work. So we had to build a whole admin system up from the ground for the next generation of digital consumers. What's nice is, and we're seeing this just across our life, more and more customers, just more and more digital.
Mm-hmm.
People never say, please give me some more paper. Let me wait 6 weeks.
Mm-hmm. So you've built the platform, you solved all these technology questions.
Yep.
What's the biggest challenge today? What are you most focused on?
We're relentlessly focused on just profitability and growing our profitability. Our unit economics are super strong. We just need to continue to stack up more units, more growth. And we're continually looking out at the horizon, or what are the next generation of products we're going to put around it. As you go through your financial life, you start getting to accumulation phase, right? And as your accumulation phase grows, at some point, you're maxing out some of your tax deferred accounts. Life insurance can be a very powerful planning tool.
Mm-hmm.
So those are more accumulation products, IUL, whole life. So we're looking at those products as our customers age. But we have incredibly great retention, and I said really good NPS. So we really feel like as those customers mature, we've earned the right to have a conversation with them about how their needs change. So in the longer term, that's where we're heading.
One area I like to touch on is investors.
Yeah.
You've brought in a significant amount of outside capital. How have your investors added value aside from the financial capital?
Oh, wow. That's a great question. They all have some different skills and knowledge. I really think about putting a board together a little bit like putting a jazz band together. So a lot of times your investors become board members. So as you pick investors, you're also kind of picking board members. So you need to be cognizant of that. That's a lot of reasons why you just don't always take the highest term sheet. Maybe the least dilution, that makes sense, but you're going to have to then work with this potential partner if we're going to be on your board for a long time.
Mm-hmm.
And I'll tell you, good boards help a company, bad boards destroy companies.
Mm-hmm.
So, our investors have been wonderful. We have a kind of vast array. Some of them have deep industry knowledge. John Kim was the ex-president of New York Life. He runs Brewer Lane. They're one of our investors. I mean, what's wonderful is you can go as deep as you want across the whole life insurance value chain, and John just gets it. It's in his DNA.
Mm-hmm.
So that's fantastic. I have another board member who's a longtime reinsurer. He understands the risk pools and how they're moving around. But I have other traditional VCs who are just early stage company builders, right? And then I have some later stage, more growth equity type investors, Omers and Tom Best, are two of our later stage investors. And they just really know, and they've seen organizations scale. And they have a broad network of relationships too. They can make introductions. They can really help you scale and really provide that wisdom on that next level of growth.
We're coming up on time. I have two final questions. One is, can you tell me about a person who has had a profound influence on you?
Well, I think I've already said it. My dad,
Right.
Incredible individual, really fun energy, and smart guy, hardworking. And, I really do. Him and my grandfather on my mother's side are just two people I really hope I mature into.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
One of the roles, I don't know if you've heard of CASA. They're advocates for kids in the social welfare system. And there are people who will stand behind the kid and just basically go into sometimes structures and organizations that feel really weird to them, like the court, and really just be on their side.
Mm-hmm.
Someone who's just purely it's not the families, it's just purely for the kid. It's a wonderful way to spend your time, especially if you can navigate those systems and really support and have an impact on kids. And, they're always looking for people, and they're everywhere across the country. So it's easy to get involved, and you can kind of dial in and dial up your involvement as you want.
Excellent. Well, Jamie, I want to thank you again for taking the time. It's been a great conversation.
Well, thank you, RJ. It really has.